Hello there everybody, a very good afternoon and welcome back to another Taurex daily live trading session today. I hope everyone is doing well and enjoying their Wednesday because the Wednesday is about to get a lot busier because we have the Fomc interest rate decision out later on. I do apologise that I am not able to cover it live as it happens. I normally do, but I'm actually out for a work Christmas party, I know, shocking. But I will give you a preview and a breakdown of what to expect from the decision today, and also possible scenarios of if we're going to be I think we're going to cut, but possible scenarios in terms of the language that's used after in some of the main US markets. As always, this is an open session. I know we're only just sort of launching the live stream, so there's not as many people on. We're starting to build the community in Discord, etc. So I'll say it all the time. If anyone has any markets they want me to cover, any concerns they have about the decision today, then now on these streams are your best time to sort of access and have those questions sent to me, and I'll answer them directly on the stream. Hello to you all in the YouTube channel. It's good to see you. Dibble, hello to you as always. Hope you're doing well. And Dan, hello to you. Been waiting for you to tune in. He's finally here. I hope you don't miss a session again. I want you back every single time. But of course, these sessions are recorded on YouTube, etc. So I know some people will watch them after. And in our new Discord channel, you'll get notified when when we post that sort of stream, and you can rewatch it as many times as you like. And Bobby, hello to you. Good to see you, and I hope you're doing well. Thank you very much for the message today. So, just quickly, if I go to the economic calendar for today, of course, it's going to be centered around the interest rate decision, I imagine. But there is some data that we had out this morning as well in the form of UK inflation. So if you're a trader of the pound, for example, we had our actual year-on-year inflation figure at 3.5%. Previously at 3.3, so it was an uptick in inflation, but the forecast was for 3.6. So sort of met somewhere in the middle there. And if you have a look at the pound as a result of that, if we just quickly go to our pound pairs, you can see that the pound's actually reacted quite positively to that news. And the main headlines that we've got here over in the UK is really just the pound inflation's gone higher in the UK, and therefore that sort of fed into a bullish pound scenario for today. So yeah, you can see that really looks quite good for some more upside, especially if you look at the Japanese yen. We sort of had this textbook is almost like a pennant structure in a way. And then we've sort of had that breakout, that retest, and then you can see that we're surging higher. So on the pound versus the Japanese yen, I mentioned this a couple of days ago, but I do think that we could see a breakout up to the 196.5 level, in the next coming days or so. But I am mindful of the fact it is the Christmas period, and things will start to slow down after this week on the Forex side, at least. Okay. And then as we move into this afternoon, we're pretty quiet. So as it stands right now, we're sort of in a little bit of a pause period. But later on, of course, we have the Fed interest rate decision, which is the main event of the week, in my opinion, and probably the main event we have for the rest of this year. And I'm just going to give you a quick rundown in terms of what I'm expecting and what that could mean for the markets coming up. So, as you can see, within this sort of interest rate decision, this is out at 7 p.m. UK time. We also get access to interest rate projections going forward, the economic projections as well. Scrolling through, you also get a Federal Reserve monetary policy statement and a press conference as well. So, a lot of people get caught up in the interest rate decision itself, when actually what really causes the movements in these markets are the press conference and also the statement and the projections as well. More so than the interest rate decision, unless there's a surprise to the figures. So, reading a few articles, and investing.com is a good place to start when it comes to having a look at the sort of projections. And you can see this message here that is something that I've really been pushing at the start of this week. Oh, it looks like I was lagging a little bit there. I do apologise. Is this sort of hawkish cut narrative? I believe that's something we could be seeing today. This hawkish cut, and a cut today is pretty much nailed on. I don't really like my connection here. I do apologise. Yes, that's better. A hawkish cut is sort of nailed. A cut is nailed on, but how will that cut be taken by traders? That's the main thing. So when I was reading this, and you saw what to expect from the FOMC meeting, the Fed is shifting its policies from being very restrictive to a more balanced approach. So what we've had here is previously we've had the markets at the start predicting all of these cuts that are coming through because inflation's falling, the economy's going to fall off the cliff, the Fed's going to be cutting 50 basis points, 50 basis points, 50 basis points. So we went from really, really dovish in terms of the expectations now into a more sort of balanced approach. And when we've had that shift from a more dovish stance to a less dovish stance, I wouldn't say hawkish, then what we've seen as a result is the dollar rise in that time. So when it comes to where we are today, then now the expectations have come down into a more balanced view from the Fed. And actually, a lot of analysts and experts are predicting that the Fed are going to actually potentially signal a pause in the future, in early next year, a pause in the rates. So it's not really the 25 basis point rate cut which I'm really focused on today. It's the communication and the forward guidance heading into early next year. That's what everyone's going to be focused on. So when you have the press conference and the monetary policy statement, obviously in the press conference, Powell's going to be hammered when it comes to the questions coming through. What we're going to do in 2025, do you see rates? Is this the top for rates? You're probably going to rule out any more hikes, but if he's slightly less dovish in his language, in terms of he sort of signals that maybe we're in for a bit of a pause period, then the dollar could continue its strength. Interesting. Because we've now shifted towards that more balanced view, if he sort of signals that we're happy with 25 basis point rate cuts, the rates are still quite restrictive, then for me, we could see. Oh, let's have a look. Just want to check in, you guys. Can you hear me okay in the chat? I think I've had a bit of dodgy Wi-Fi over the last couple of weeks. It's been really frustrating, but you can hear me okay, yeah? Yeah, okay, cool. And I'll answer that question in a sec, Dan. It's a very valid question. But if now because we've now shifted towards that expectation that we're seeing a less dovish view, there's also that chance now that what's not been priced in is slightly more dovish language from the Fed, i.e. signaling at more smaller cuts, because the sort of markets are not expecting that. Do I also look at 2s, 10s and 30s when it comes to whether I get a view? 100%. We can go on the price action of it now. Let's have a look. I do believe I have a yields. I do, look, see? So I do actually look at that. So you can actually see those yields rising still. There's the 10s, there's the 30s, and there's the 2-year. So you can see that there's been that shift to a more sort of, I wouldn't call it hawkish, but I'd call it a less dovish approach, a more balanced, a more holding approach, sort of like the RBA are doing at the moment. And you can see that in the price of rates at the moment. Now, do I expect rates to continue to blast above sort of, look at the 10s. I'm not expecting them to blast above here, but this is the pricing in of that sort of less dovish view. Oh, sorry. And I look at that, and I do think we will get that today. My concern is how much of it's already priced in. When if you look at rates, there is still a little bit to go. So yeah, my overall opinion, my overall sort of stance on this is that we're going to see a hawkish cut today. If you can class a cut as being hawkish. So what does that mean for the US dollar? Well, in typical sort of December style, you can see really, and as you can see, Dan, you can see the correlation that this has with rates, because you can see that the dollars, as those 2s, 10s and 30s have sort of risen, you can see, I think the 2s is probably your best bet if you're looking at sort of the immediate expectation of rates. Your 2s is probably your best bet, of course, because that's the shortest time period. I didn't actually give that a proper look, did I? You can see that's up 0.24%, a little bit of a rejection yesterday. But yeah, again, still a little bit of an uptick really since the beginning of December. If I look at just quickly if it's not going to lag when I open up this web page, is look at that. So I don't know if you followed this, Dan, but if you look previously, I don't know if you looked at the beginning of December, if you looked at this CME FedWatch tool, this was more like a 50-50. And as that expectation of a rate cut has now been, as you can see, 95% sure, as that's happened, you can see the rise in yields. So that is a good analysis of what to expect, or a good barometer of what to expect, 100%. So yeah, 95% chance of a cut today. So it's interesting, isn't it? Because the markets at the start, when we was getting this move in the dollar, that was everyone like expecting all these cuts, 50 basis points. And then as you can see, as those yields have risen again and those expectations of higher cuts have been diminished, you can see how that dollar's risen as a result of that. What I would say is that we're yet to see a massive breakout in the dollar, and I think the biggest sort of resistance area or area of interest for me is this swing high here at 107.3. This is on the daily time frame. I think, as you can see, we had a bit of a buy side liquidity grab here, and we can see that rejection. We are coming up to test it once more. If the Federal Reserve is a lot less dovish, if Jerome Powell is a lot less dovish in his language, we could see a move up to 108. So we'd see a move up to 108 potentially if the Federal Reserve is less dovish in its language. If the Federal Reserve cuts by 25 basis points, and actually he's not too hawkish in his language, i.e. he recognises that the labour market's slowing down, that maybe there's going to be more signals at more cuts to come, then we could see the dollar index fall, sort of rotate back down to, because I'm not expecting huge moves, because we are in the end of the year, but we could see the dollar rotate back down to maybe somewhere around the 106 level. So they're my two scenarios for the dollar. I can actually, let me, so this is key level. This is a hawkish cut scenario. And this is our, let's call it dovish cut. Oh, I'm going to draw that a bit better. Oh no, I want that, sorry. There we go, that'll do. That's the sort of expectation I'm looking for today. So how you would actually trade that is obviously you'd marry that up with the likes of euro dollar, the likes of pound dollar as well. The one that I'm looking for, if we want me to pick my favourite to trade, if we get the hawkish cut, like you say there, Dan, USD Swiss is a really nice one. Obviously, you saw that surprise cut from the. We thought the Swiss National Bank were going to cut 25. We didn't expect them to cut 50. That's obviously spelt considerable weakness in the pair, and you can see that breakout, right? You can actually see, if I break this down now, what we had before was a fair value gap. You can see how we've broken above that fair value gap, tested it, and it's acting as support to actually go higher. So should we get that hawkish cut today, 100%, I'll be looking for USD Swiss to make that move up to 0.898. Because it's all about, in trading as well, it's all about sort of picking the right pair for each scenario. And I think as well, obviously with what's been going on in in Europe at the moment, obviously with the chaos in France and all that sort of with the government situation, there's been a lot of instability in the euro in particular. And as you can see, I actually I've got a trade marked out here on euro dollar, basically from this buy side liquidity grab, and you can see it's been a bit of a painful one, but you can see this euro dollar trade is moving in our favor, and you can actually see that I'm looking for a move down towards this 1.03353 area. Whether we get that this year, I'm not too sure, but again, should we get a hawkish cut today, and the language is much more hawkish, then a move down to 1.03 could be on the cards early next year. So that's something that I'm sort of willing to hold for now. Yeah, I mean, negative rates in the future, do you really see that? I'm not totally convinced whether we are going to see that, to be honest. But yeah, in fact, do you want me to have a look? Let's see if there has been any recent news on it. Yeah, lots of could. The Swiss National Bank introduced negative rates for banks in January 2015, so it's not against the realms of possibility. But the S&B says the likelihood of negative interest rates has come down. But we shall see whether that comes through or not. Okay, right. And if we're going to play, the sort of the dollar weakness, if we get the not so hawkish cut, and actually the language is quite data dependent, and there's a nod to the fact that the labour market maybe is slowing down, because that's the main thing, is where everyone wants to know about the labour market. So if the statement and Powell are like, labour market's really strong, the economy's really strong, that's quite, hawkish, decisive language. We'd expect the dollar to rise. But if the language is more, we notice the labour market slowing down. I can't imagine them doing this, but in the labour market slowing down, we still there's more cuts needed. Rates are still in very restrictive territory. That sort of language that will give us the sort of ammunition to, I think, trade the pound versus the US dollar higher. And the reason I want to trade the pound versus the US dollar higher today is just because they had that increase in inflation this morning. So that's probably your best bet to sort of try and trade that. And of course, if we're going to try and look for key areas to target on the pound, 1.28 remains our sort of, if I just put dovish cut, that remains a key area for me to really target on the pound versus the US dollar. But as you can see, I'm already short euro dollar, so I might just potentially just sort of cash out that trade if we are a lot more dovish than the markets are expecting. With the likes of gold, you can actually see that we're probably trading into some good support areas here. You can actually see we had a little bit of a breakout. The bear case here is that we had a buy side liquidity grab, up this high. Look at that rejection. But we have traded since into some bullish order blocks, as you can see here. And we've taken out these equal lows. If I zoom in there, you can see that. So there's a chance today that I think no matter what, the markets are going to cheer for the cut, right? It's Christmas, Santa Claus rally, everyone's in a good mood, the economy's strong, the Fed are cutting. I could see today my two strongest plays are like more stock market upside and more gold upside. So as it stands right now, it's a risky trade, don't get me wrong, but you can see that we have taken out these equal lows. We have reacted to a bullish order block here a little bit. So there might be a chance to trade gold pretty much from where it is now. And we can maybe get 4-1 out of it if we do get a move up to sort of that 2685 area. That's the sort of thing that I'd be looking for today. And it would be a trade from market right now. So I was looking at that before I came on, and I was waiting for these equal lows to be taken, and you can see they have. So let's see if we can get a nice push up higher in gold today. And then obviously with the stock market, again, you have to pick. I always say this to everyone who trades a stock market. It's always important to pick the right index for what you want to do. I wouldn't pick the US 30 to buy. Okay, so we have traded into a daily demand zone, but I was looking for that 61.8% fib to be support. So you can see that. Look at those days of downside there on the US 30. If you look at the Nasdaq, that looks strong, doesn't it? That looks a lot stronger at the moment in terms of its technicals. And again, the S&P 500, which actually had a nice trend rider trade. If you guys are still interested in that, you can see that as there was our trend rider long there, which we've sort of cashed out on now. So I'm going to delete that. But again, look, nice pause period. You know, we're creating this tight consolidation area. You always sort of get this in these sort of December markets, but you can see that we're threatening, if we do get a breakout there, maybe we can utilize a buy stop today, because I think that the markets are going to cheer no matter what when it comes to cutting. It's the end of the day, it's a cut. You know, you can dress it up as much as you like. It's another interest rate cut, and we're cutting into a strong economy, right? That's what you got to remember. There isn't massive signs of recession. The labour market, for me, in my opinion, is still pretty strong, and therefore, I see no bear case at the moment. The only way that I could see the stock market falling is just from natural profit taking from all-time highs. Dan is bang on. Stocks, still a buy pullbacks. The trend is your friend until it bends, or it is what it is until it isn't. That's what I like to say. If we've got bullish market structure, it's bullish market structure until it isn't. Therefore, when we go onto the charts, we should always be looking for buys. That's why I'm a bit hesitant for dollar sells today and like that pound dollar upside, because you can see on those higher time frames that we are bearish, right? Because we've made lower lows and higher lows. You can see that. So therefore, I'm not like massively keen on trying to call the bottom here. If we do get a breakout above 1.28 today, like this, well, then you can see that the structure's just changed. Yeah, so then we can say, right, now let's look to buy pullbacks. But until, and it is what it is until it isn't, euro dollar, look at that. You can't tell me that's not bearish, right? So that's why I'm sort of holding on to that trade. Okay. Fantastic news as well with my oil trade anyway. This is sort of the best trade I've had for a couple of weeks, really. Really easy, fair value gap. So this was my I can't even get my words out. This was my oil trade from this fair value gap. Move into that fair value gap, come all the way down. There's a reason that I had my take profit down at this low. And that's because it was a key low, it was a key liquidity area, and what the threat was is that we got the market, which as soon as we got below that low, there was some profit taking, and we moved back in towards. So that was a really, really nice 4.3 to 1 trade. Yeah, the Eurozone is an absolute shambles. Yes, that's probably a good way to put it. For those of you on the stream or those of you watching, you will notice that we have our Discord channel, which is now live. I've spent the last 2 days setting it all up. Some really exciting things in here as well. If you're interested in getting trading signals, we have a partnership with Acuity, and they'll be sending regulated premium signals to the channel for free. So if you come into the Discord channel, and then you can get access to that. I'm just in the middle of setting that all up. We also have a really fantastic account analysis tool as well. So if you want me to give you sort of free feedback, as you can see here, on the analysis of one of your Taurex accounts, I can do that in there as well. We also have copy trading. So if you want to become a regulated signal provider or a professional trader, link your account to a professional trader or become a regulated signal provider on our copy trading app. All the details are going to be in there as well. You're going to have all of our social feeds, and also you can basically just come in and just chat to me. Look, you can see yesterday I posted my trade idea on crude oil, and I'll post my charts in there all the time, and also information on our demo trading competitions will be all in one place, so it'll be really easy for you to follow. Let me get the link for you now. I will have a QR code that will be like here. so that people can just scan it and then join. So that's a community that we're building, and we're really, really, really looking to build that community, because I've come from that background and I know how important it is, because trading can be a lonely place, to sort of build up that community feel. So feel free to come and join that if you wish. If you don't want to, that's fine. You can just see me live every day at 1 PM here on the YouTube channel. Okay, that's pretty much about it for today. Good luck to those who are trading the FOMC decision. Again, this is the sort of thing where even though I'll be out today, I will still be active in the Discord. Should anyone want to talk about what the decision is, what the language was, then that's the time to do it, because I'm obviously not going to be streaming later, and I will have Discord on my phone. So I do sort of, I'm on it all the time, to be honest. So it's probably a good time to chat to me. Okay, good luck everybody. Take care, trade well, have a good trading day, and I'll see you all tomorrow. Thank you.